Hello friends, this is Raj Sastry from Raj Option Trading. Today is October 24, 2021. I want to talk about one of my favorite stocks here. It's a snap.com. Everybody knows Snap. It's got a favorite chatting application called Snapchat. It's also a camera company. And this company is making some headways in the virtual reality. Look here, all these folks are trying to do some virtual reality and spooking it up with all these various images on top of their head and body here. I think this is a great one. Lot of millennials and younger folks love Snapchat. They're also growing very nicely, and they want to reinvent the camera and provide the opportunity for people to express themselves. They've got a lofty vision here, and let's see what we can do with the snap here and see if we can take advantage of this huge drop in snap stock on Friday. With that, let's jump in here. So as you look through here, why is Snap tumbled? Look here, Snap down 26% in one day. You don't see too many big cap names going down that way. So Snap tumbled because they had a softer guidance, and they reported 17 cents per share EPS, but that's below the analyst expectation here from a revenue perspective. So I think analysts were expecting 8 cents and 1.1 billion, but I think on the earnings side they fell shy. That's why stock dropped big time here. I think we should look at this a little more carefully. And they also estimated fourth quarter revenue that was a little bit below analysts' expectation here. They said 1.16 to 1.2. Analysts were expecting around 1.36, which is about 14% below the estimates. So analysts also did not like it. The stock came down drastically here. It's came down so heavily. It offers an intriguing opportunity for people like us here. And then also, Snap said there is an issue around Apple's consumer privacy policies that impacted targeted advertising. These companies make money by targeted advertising. Apple basically had some releases in June, July that really made hard for these social media companies to track and target this advertising. So we'll watch this carefully, but at this time I think it's slowly good to buy Snap, take advantage of this great company's huge big drop and also a overreaction by market. So let's jump in and get started here. So as you look through here, Snap, it's a great company here, and we have Ivan Spiegel as the CEO. Still co-founder of the company at the helm. I love to see co-founder at the top. These co-founders, they typically give sweat and blood and make sure company does very well. They have a vested interest. And as you look through, they are a camera company. They want to reinvent the camera and allow folks to express themselves. It's a nice approval rating here, 8.82%. I think that's a good one here. I think Ivan Spiegel doing something right here and trying to turn the company around nicely. So as you look through here, from a daily active user perspective, daily active users is very good metric when it comes to these social media companies. Look what's going on here. We got North America, pretty much increasing, slowly but surely. And we got here Europe. Europe is also increasing nicely. And look at rest of the world. Rest of the world is really on fire. Daily active users is increasing heavily, but I think they make more money from a monetization perspective. I think North America is better compared to the rest of the world. But understand there is a nice daily active user increase here, which is a good sign here. As you look through here, penetration in is very good here, high penetration in established market like US, UK, Australia, so on and so forth. And also, this is one thing I love to see. Look here, 13 to 24-year-old population, there is a 90% market penetration, and 13 to 34, there's a 75% market penetration. So what that tells me is really this younger generation, they are more into Snapchat and this company's application, which is really good because these younger generation will stick with it, and that will cause this company to establish themselves. I think that's a good news here. As you look through the company here, Snap, it's a camera company. They also have the Snapchat, which is a favorite application for many people. Stock price is around 55, which is came down drastically. Market cap is around $88 billion. Look here, nice chart here. It's a weekly chart, goes all the way back to 2017 when the company became IPO. Many folks wrote off this company after the initial debacle of this company's IPO, as you can see here. But Ivan Spiegel, the CEO and the co-founder, is always at it. And see here what happened. Right from 2019, stock caught fire and went up nicely. And there are down days once in a while. You can see here, during COVID it came down again sometimes in March this year. All this downturn is a good buying opportunity. Right now, as you can see here, stock is below its I think it's maybe it's a 100-day moving average or so, or I think it's a 200-day moving average. I think you should buy now slowly. I think it could be below 50-day moving average. At this time, you should be able to buy this stock and take advantage of this huge down candle here. And from a news perspective, as you look here, Snap leads 142 billion social media sell-off. So it's a big blow to all the social media stocks, especially because of Apple's privacy concerns. These companies cannot track and target their advertisement, and Snap suffers record decline. Don't expect the same from Facebook or Google. These are a little more bigger companies, and this is really a buying opportunity, according to Simply Wall Street. So we should look at such huge big drops here and see if we can buy companies like Snap on a discount here. So with that, let's look at the numbers here. As you look through, the annual earnings per share numbers are going in the right direction. From negative, it's turning to a little more less negative. That's a good indication here. From an annual sales perspective, it's a rocket ship. I love to see these type of sales numbers. That shows companies growing, top line is increasing. It's always good to see this. And from a shares outstanding perspective, a little bit increase but not significant. I can take this given there is a nice revenue growth, as you can see here. And from a quarterly number perspective, they're doing pretty good from a quarterly revenue perspective. I like this trajectory here, and they're also doing good on the quarterly profit. Companies really growing the quarterly profit, as you can see here, and companies also spending money in R&D. I love to see companies spending money on R&D. That tells you they have fire in their belly. They want to keep competing and keep bringing out new products. I love to see these numbers here. That's why I'm bullish about this company. It's still a young company, and it's ground up, built nicely. I think we should look at this company, take it as a buying opportunity, and take it from there. Next, let's look at broader social media ETF. So social media, as you can see here, we got SOCL here. We got volume of about 72,000, and it's a little bit bigger market cap or a net asset value perspective. So look what happened on Friday. Even this ETF here dropped 4.3%. And we got Buzz here, again one more social media ETF. They also dropped 2.2%. So at this time, I would buy slowly into some of the social media names, given there is a huge drop, and market overreacted. Some of these Apple's privacy change happened in June and July. I think some of the news is already baked into the stock at this time. I think it's good to look at and buy some of these names here. Next, let's look at social media stocks. These are the peers of Snap here. Look here, Snap, $55, $87 billion market cap. Look at the drop here, 26% drop in one day. That makes the RSI 50, which indicates stock is oversold. And now with this huge drop here, they're only up 51% for 1 year, all the way from 6 months to one day, all in red. And then you got Sprout Social, one of my favorite stock here. I love buying this stock on the down days. As you look here, this also dropped a little bit, not too much. Still doing well here, RSI 52. You could take advantage and buy some SPT also. Then you got names like Yelp, Google, Twitter, all down here. All these social media names are down here. Keep watching the RSI levels. You could buy stock like Facebook here, given a low RSI here. Stock has been dropping off, and take advantage and go from there. Now what we'll do is we'll jump in and look at some of these stocks in a little more detail and go from there. So as you look through here from a fundamental perspective, Snap stock price is $55. Huge big drop, $19 here, or 26% drop in one day. That puts the market cap at $88 billion. And I love to look at the stock or the company in little more detail. It's always good to look at multiple time frames here, see how the company has been doing, where it's coming from, how the numbers are trending. As you look through this company here from a market cap perspective, it was a $14 billion company back in 2019. Now, even after this huge drop, it's a $88 billion company. Clearly, company is growing its market cap, and along with it, company is growing its market share and competing against the bigger companies like Facebook, like Google, and so on and so forth. From a stock price perspective, it was $11 company back in 2019. Right now, even after the drop, it's a $55 company. So I would, still, it's a great one. There's a nice price appreciation. Even with this huge drop, it's still up for the year. That's why I love companies like Snapchat here. And look at the sales here. Sales is pretty steady eddy here, improving, every quarter nicely. That's why I like this company. I would buy into this weakness here. Look at the quarter over quarter change. Nice positive change since 9:30 here. It's going in the right direction. Earnings per share perspective, it's a real negative earnings per share, meaning company is not making money at this time. They're not showing the earnings yet, but understandable. These social media companies, they're spending a lot of money in their own R&D. They're not in a position to show any profit right now, and this company also need to pay for their data center needs, so that way they can host all the applications there. As you look through from a cash perspective, they got a lot of cash, $3 billion. They're improving their cash position, as you can see here. No need to worry. Company is solvent. They got a lot of money. They do have some debt here. They're increasing the debt, as you can see here, which we'll watch carefully and take it from there. And debt to equity is one. That tells you they do have some good debt here, but if it goes higher, I'll be worried. As you look here, they have reduced their debt to equity ratio from last quarter 331 to current, which is a good news here, trending in the right direction. And free cash flow and operating cash flow both are negative here, and nice gross margin. They have improved the gross margin, which is good here. Operating margin, as you can see, is an improvement from negative 39 to negative 19, and same story with the net margin. Look at R&D here. They're spending money on research and development. It's ever increasing slowly. I like to see this trajectory, and I'm always bullish on companies who spend money to turn around and invest in their own product. And, and both ROI, return on assets, return on equity, ROA and ROE, both are trending in the right direction. It's going from a negative, bigger negative number to a smaller negative number. From a price to sales perspective, little pricey, but stocks like Snapchat, it's expected. Key takeaway, companies making money, they're growing their market cap and market share, and steady Eddie company, there's a nice sales growth. So that's the reason I'm bullish here. I'm not looking at one time picture, I'm looking at the trajectory here. How is the trend when it comes to this company? Next, let's look at the quarterly earnings statement by Ivan Spiegel, who is the co-founder and CEO. They beat the EPS by 9 cents, and they missed the revenue target by 31.97 million. So that's why market did not like it. Anytime you miss the revenue and give a down turn, a little bit down projection or an outlook, that's when stock drops big time. So overall, as you can see here, they're reaching 500 million people. 75% is 13 to 34-year-olds, and they're growing into various marketplace, various geography. That's a great news here. They're innovating their camera, also good here. As you look through, they grew their daily active users, which is really a measuring stick when it comes to social media companies. That's very good here. Great news. They're growing in North America, Europe. I think it's their largest monetization opportunity here. That's a great news here. And also, as we look here, on the negative side, the user-generated stories continue to see some decline here, which is a little bit, not so great news here. They grew their revenue. That's a good story here. On the negative side now, they missed their guidance here by 3 million due to advertising tracking on the iOS devices due to Apple's privacy policy. As you look through here, Apple rolled out this iOS tracking change here in June and July. That's the reason this company got impacted here. So as we look through here, we got some macroeconomics here. There is a lot of supply chain issues around the world, and customers of Snapchat, they do have some challenges with this, with this supply chain constraint, labor shortage. That may be one of the reason where they are cutting down on this social media digital advertising a little bit. And as you look through here on the positive side, they got some great exciting opportunities around augmented reality, and they're working with a lot of the companies in the entertainment, fashion, education areas. And they're doubling down on their early success in helping people trying on clothing and partnering with the great companies like Ralph Lauren and MAC Cosmetics and Zenny and so on and so forth. So as you can see here, there is a news about Apple and its rollout of this privacy policy, which is a negative. On the positive side, they're growing their daily active users, and they're also bringing out new products with augmented reality. That's why I think it's a bullish here with this huge big drop here. I would be a buyer of this stock. This company was there for last 10 years or so, and they know how to turn around. And the CEO and the co-founder Ivan Spiegel, he can head the ship and turn it in the right direction. So with that, now let's look at performance over the years and months and quarters. As you look through as you look through here, we got yearly performance here. It's a nice yearly performance, as you can see here. Stock in the past they had some challenges, but as you look through here, stock has been doing nicely. That's why I think it's a bullish here. I would be a buyer of this stock. Let's quickly go back once again here. So as you look through, from a yearly performance perspective, let's give it a minute. It's spinning here. From a yearly performance perspective, as you look through here, even after this big huge drop, stock has improved. They're up 10% for the year. And as you look through 2020, they have done very nicely. 206%, and 2019 also they've done nicely. That's why I'm bullish about this stock here. I think this can do well. So overall, from a yearly perspective, stocks checks out. Right now, it's a huge drop. It's a buying opportunity. And as you look through here, monthly performance perspective, the stock has some up and down days, as you can see here. But overall, every drop here, one back in March, it's a buying opportunity. Right now, there is a drop here, which is again a buying opportunity. I would take advantage of this huge drop here and buy the stock here. As you look through the weekly performance here, ouch, look at this huge big drop here. So I would take advantage of this huge big drop here, and buy the stock here. See here, huge drop here. And whenever they dropped in the past, also they dropped back in March here. Stock came up nicely. They dropped in July. They also dropped in March. So this tells you this stock can come up, bounce back after these huge drops here. Then let's look at weekly performance. Same story. There are both reds and greens here. Every time there's a big red here, it's always a buying opportunity. And then look at the daily performance. Look here, huge big drop, 26%. I think I would be a buyer here and buy this great company at a discounted price here. So with that, now let's jump in and look at a monthly performance pattern here. So I love to look at these type of patterns here. As you look through here, we got years on the top. We got 2021, 2020, 2019, so on and so forth. And we got the months here, December, and so on and so forth. As you look through here, if you take a cursory look around October here, look here, 25% drop, 4% drop, 22% drop. Generally, I mean, you can think that there is typically a drop anticipated or expected around the October timeframe. Historically, September October timeframe is a little hard for them, and this time it's a little more hard because of the iOS issues. Then there is little bit downturn when it comes to say May time frame here, 20% drop here, and March time frame as you see here. This is how you kind of get an idea on what might happen by looking at this pattern here. And look here, the huge drop back in October and back in 2019 also. They came back up nicely. There may be in this case 2018 they just went IPO, but they turn around. Look, as we went into 2019, there's a nice turnaround. That's why I think if you're patient, this company can really give you nice opportunity to grow your profit. Next, let's look at the stock chart here from a technical perspective. This is a 5-year chart of Snap here, all the way from 2017 when they became IPO. Stock has been has done nothing much since till 2019, but after 2019 stock kind of shot up, as you can see here, nice higher highs. Now there's a huge big drop here. It's below its 100-week moving average at this time. I would be a buyer here. I think this will turn around. See here, huge drop in the RSI levels here. Anytime RSI drops like this, like a rocket ship, look here, it's a buying opportunity. And one more here, again, stock went up. So I think, will there be one or two more down days? Probably, but it's indicating right now it's a good buying opportunity. You should slowly accumulate and buy this great company here. Next, let's look at a yearly chart here, a little bit shorter term time frame here. Company are doing nicely, as you look here, but huge big drop here, 26% drop after the earnings, and RSI dropped and collapsed. No need to look at this chart right now. It's very ugly here, with the red line, the DMI shooting up, blue line going down. That's why when the stock drops like this, put your technical analysis hat outside here and just buy the company based on the fundamentals. That's what I do. That normally serves well, as long as your time frame is a little bit longer. Next, let's look at even smaller time frame here. This is a 2-day chart, 2-day 10-minute chart of Snap here. Huge big drop, ouch, and stock tried to recover. These are all 10-minute candle here. As you can see here, there is a huge big drop here. It almost dropped to around 54 or 52 here, but it kind of tried to recover. See here at the as the market ended, even after market, stock is trying to stabilize here. That tells me the drop is huge enough. It's trying to consolidate and go higher. A little bit early to call, but by looking at the pattern here and how the stock ended, that typically gives a cue of what might come later. That's why I think will there be a little bit drop there maybe, but it's generally a good time to buy Snap at these levels here. And now let's turn our attention to the option chain here. From an option perspective, even though you may not be an option buyer, it's always good to see how the option market is thinking about a stock. By looking at this Snap at $55 right now, if you look at 55, the price point at a strike here, we got 2,900 volume here. And as you look through down here, keep watching the open interest and the volume. We got huge volume at 60. A lot of people are betting stock will go to 60 by February 2022. And as you go further down here, there's a lot of nice volume here. Even at $110, there are people buying this option, thinking this will bounce higher and paying a cheap price here, 29 cents or so. That's why there's a nice volume and open interest, even at a higher strike price. And on the put side of the house, there is, as you look through here from a volume perspective, let's see, open interest and volume. There is also some volume at the higher level. People are also hedging. So, this is one way to read. Keep watching the probability of touch. Probability of touch at the current level is highest because of the current stock price. As you go higher, probability of the stock touching say 65 70, it's 75 56, and probability of touching 40 is very low, 43. That kind of gives you an idea. There is a good chance the stock will touch higher prices here, even though there is some chance to touch lower price also. What we'll do is really at this time just keep this in mind. There are people betting the stock will go higher. They're buying call options. That's why volume is higher, open interest is higher. As you look through here, open interest is highest at $90. There are people who are betting stock will go to 90 by February. They're buying a lot of call options. Now let's look at a summary of this open interest here. As you look through here, this is the option statistics. Number of calls traded is 1.7 million. Number of puts traded is 1.2 million. That tells you there are more number of calls traded. That makes the put call ratio 0.65, which is bullish. It tells you there are a lot more people who are buying call than puts. And also, as you look through here, keep watching here. We got IV percentile and all this great number. Look at VWAP. VWAP is 57. Stock price is 55. That's telling you stock will go higher to 57, which is the which is the price it will gravitate towards. So that's why it tells you right now it's a little bit oversold here. It will go into this level pretty quickly. So with that, let's jump in here and see what we should do. Snap tumbled big time, 26% due to shorter, softer guidance here. Their advertising business is disrupted by iOS tracking change rolled out by Apple in June and July. And there is also macroeconomic effects with the global pandemic here. Advertising partners are facing variety of supply chain considerations and labor shortages. That's why they're cutting back a little bit. Those are on the negative side. On the positive side, there are more people on the platform. The more people you have on the platform, it's a real nice networking effect here. And on the positive side, the younger generation is flocking into their platform, which is a great story. And they also did a good revenue here, 1.07 billion, increase of 57%, which is very impressive. And they're growing their augmented reality here. It's one of the exciting long-term opportunity. I think that's also bullish here. The company is really putting their R&D, research and development, to work here. And they're also doubling down on early success on how people can try their clothing. It's not good old days anymore. People want to try the clothes on with the comfort of their own home and try it out. That's why this company can help in those areas. I would say, take advantage of this huge big pullback in Snap, and buy Snap at these levels and take it from there. So with that, thank you very much. Happy investing and trading. Please subscribe.